Stocks are higher again today, with the producer price index showing some softness in inflation, which is definitely a positive sign for market investors, traders alike, who were a little bit concerned that we might be seeing a bit of a double whammy where you get growth slowing, right, which has been evident recently, but also inflation going up, right? If we had seen inflation come out really hot this morning with the producer price index numbers, it would have scared the markets a lot, because then you would have had the double whammy effect. But instead today, what we got instead is actually inflation continuing its cooling process. And this is a good thing for the stock market, which is why stocks rallied today. They might say, why are they up so much on just a little bit more cooling inflation? Well, remember that the market can now shrug off this idea of, oh, we're going into high inflation, slow growth, which is also known as stagflation, at least for now. And that is a very positive thing. Let's just paint a picture really quick where you get something like this, where you actually have inflation going up and then you have growth slowing. What can the Fed do with interest rates during that time? Now, remember, with interest rates, if you lower interest rates, the Fed, the standard philosophy is that would help to boost growth and help the economy. But you can't lower interest rates if inflation is going crazy. Remember, to get rid of inflation, what do you have to do? Keep interest rates high so that it kind of constricts the economy a little bit. But let's just say that you had inflation going higher. Then what would that do to the stock market story? Well, it would say then interest rates have to remain where they are. They can't come down, which has been the recent optimistic rally in the last few months. Hey, interest rates are coming down because inflation is cooling. So today, the reason the market is celebrating this is that we got the A-OK, that, okay, look, inflation is still coming down. So yes, growth is coming down, but we have inflation coming down. That gives us the green light to actually unload some of this high interest rate environment that we're in from the Fed. That gives us a pretty good picture for the still intact soft landing idea. Because again, if you have inflation coming down, then you have room to cut interest rates. If you have interest rates coming down, it could spur growth, and then we're doing okay. In terms of my own positioning, today is a really nice day for me. I'm up about 1.43% on my account because I have a lot of exposure to technology, which is really killing it today. I went long things like SMH, which is the semiconductors ETF. I'm long SPY, which is another position I'm in that's going pretty well. And I'm long IWM, which has not been super exciting, but we're still up a little bit. I also took a position on Nvidia recently, which is a new stock for me. I bought it down the lows, feeling pretty good about that buy, at least for now, and we'll see where that one wants to go. By the way, I also just sent an updated view on my S&P 500 trade to all of our members inside of our Discord group. I trimmed my risk on the position, just trimmed up my stop loss a little bit. And by the way, all of our trades get sent directly to members inside of our Discord VIP group. This is a paid service, but I put this stuff out here on live brokerage accounts. This service that we offer is on real money, no nonsense, no fake stuff, no Lambos, no lifestyle. If you really are looking for a trade room that is dedicated to transparency, as well as real, thorough trading analysis and setups that we're taking on our own live brokerages, consider joining us, because currently we are doing a 35% off discount sale. Now, if you'd like to get access or get some information about the service that we offer, I am very confident that you're going to get more than your money's worth, especially with a 35% off discount going on right now. To get access to the discount or ask any questions you might have, you can speak directly to my team, who's standing by to set you up with a membership using the very first link in the description down below. Again, just let them know you saw this YouTube video and they'll give you 35% off the membership so you can come trade with us, especially with a week like this week and the rest of this month and really the rest of this year. We got so much stuff to do, and it is a one-time fee to join. So check it out. First link in the description. So if we take a look across the board here, what we see here today is the S&P 500 up 1.06%. The NASDAQ's up 1.8%. The Russell's up 0.75%. The Dow Jones is up about 0.5%. And you see the dollar index down. You've got gold slightly lower today, silver down about 1%, and oil is down 1.5%. By the way, while we're on the oil chart, oil prices being lower is still also good for the inflation story, because Lower prices at the gas pump means lower prices for goods and services across the entire economy once that trickles through the system. So it's actually a good thing that oil prices remain, not at kind of those peak levels that we saw September of last year, up in the high 90s, right? That was a little bit concerning. Then you go back into 2022 and we had the Russia and Ukraine invasion stuff going on, right? That really caused oil prices to go skyrocketing as supply lines got kind of slashed due to Putin's war with Ukraine. So, we'll keep an eye on all that stuff because there is still a lot of geopolitical stuff. And speaking of which, a lot of people are liking the idea of staying long gold for the possible risks associated with what's happening in the Middle East or Ukraine or Taiwan and China for that matter. So you have a lot of geopolitical risks that are uncertainties to this market. I actually think that the PPI number here this morning, which came in lighter than expected. In fact, let me pull that up. So the producer price index came in lighter than expected. So did the core producer price index, came in very light, and they revised the previous number down. Overall, this was a really non-threatening inflation statistic. So how does that impact things like gold, the dollar, etc.? Let's look at that. So if we take a look at gold's price action here today, we can see we bumped up against the all-time nominal high again here to try and break out. And the question is, do we have the fuel here to really get through the highs? And I actually think that we do. With the inflation statistic coming in so non-threatening today, the market is still waiting to see what happens tomorrow with the CPI, which could, of course, reverse course here, what we see today, or kind of elongate it further. But one thing that you have to understand is that a lot of the components that make up the producer price index calculation also trickle into the CPI, right? These two things share a lot of the same inputs. So with the producer price index coming in light today, it bodes well for the CPI as well in the inflation story as a whole. Again, CPI and the PPI, they have some differences, but they also share a lot of the same kind of inputs. So again, CPI and PPI inflation statistics overall seem to be cooling for now until we get tomorrow's data. We'll see what that brings. But cooling inflation means interest rates, as we discussed at the beginning of this video, could be coming down. And interest rates coming down is good for gold because it's weak for the dollar. I know we're going, kind of high level on this stuff. We're speaking very macro heavy and fundamentals heavy today, but it does matter, and it sets up, in my view, what could be a suspended breakout above the highs. A lot of people ask, Nick, how do you know if a breakout is going to be, there's going to be follow through and it's not going to be a fake out? For me, the answer is usually, is there a good fundamental catalyst to stretch that, to propel that breakout further? And for me, with the gold chart here, if we get a nice closure above this previous all-time high, or we just close at a nominal all-time high, that's a really positive signal for gold. And in my view, signals that the run is not over for gold. Yes, we're at highs. A lot of people are going to sell this resistance point thinking that it's gone too high. And maybe that will turn into another one of these events where you could maybe make some money on the short side. But for me, the path of least resistance for gold is higher, as it has been all year long. This has been a very good year for gold. And if you've been short on this, it's been a rough year, right? Because this thing has just been trending higher on many different geopolitical concerns. Rate cuts are coming. And again, the U.S. economy is showing signs of slowing down. So we'll have to keep an eye on that. Again, if I take this trade, it will be shared inside of our Discord. Reminder that 35% off discount is ending soon. First link in the description if you want to see any trades that I take on gold. I am watching it myself very close. Speaking of top setups or things that I'm watching, here is our top setups page right now, where we can see gold is getting that positive bullish reading right now. Commitment of traders data still shows institutional money is still very long overall on gold. We can see the positioning very heavy to the long side when it comes to gold. And on the latest week-to-week filing, we can see a overall net bullish kind of shift in gold and a lot of yen short covering as well as CHF short covering. I tend to think that the worst of this, yen carry trade stuff is behind us. I've been saying that for a little bit now. We could be right about that. We could be wrong, could resurface. But right now, I think that risk on has a good chance of kind of making a comeback here. And, maybe we do continue to see stocks drift higher, and maybe we see that dollar index continue to move lower. And you may ask, why is the dollar down today? Well, again, inflation cooling signals rate cuts are coming. Rate cuts coming into the picture means the dollar becomes less attractive for foreign investors. And of course, it indicates that there could be more money printing coming. More money printing, more dollars in the system means the current supply of dollars becomes less valuable. Many traders are also wondering about the Japanese yen and the Swiss franc. And this morning, I actually had a conversation with Ivan on our live stream about these very things. So check this clip out from the A1 Trading Show this morning. You know, the Japanese yen, my goodness, this move from the low to where we currently are is 550 pips. It doesn't even look like that much, just to show how violent that move actually is.
So as requested, we are on dollar Swissy. We are 222 pips up from the bottom, and then you need to decide. Now you have it. This is testing ground, right? So at what point, or is it still not? At what point is it bullish for you? And then you have to go back into all these other times where we have done this type of situation, because what is it called? Preparedness meets opportunity. Because nothing really happened to Swissy. Swissy wasn't a part of this game, generally speaking. Well, in the end, it was proven by the COT report that there was a lot of movements away from the carry trade with the Swissy, but the Swiss National Bank, the Swiss economy didn't do anything. So we need to keep this in our heads.
Yeah. Yeah, and that's the thing is when you take a look at both the Swiss franc and the Japanese yen, saw a lot of buying of their currencies because the world kind of entered this pandemonium, you know, terrified of global recession. But that's not usually how it works, Ivan, right? Like a recession doesn't jump on you. It usually materializes over time, right? So like this idea that we have one bad jobs number and the world's going to go right into a recession the following week is not very realistic. I mean, if you take a look at, for example, the signs in 2008 of a recession, many people, obviously hindsight is 2020, but many people were pointing out that the recession really only got seriously announced once, you know, we had really seen the bulk of the stock market sell off. So, you know, if you're someone who thinks, oh, we're going into a massive recession, well, you could kind of be like on a roadmap, you are here, right? You are here, right? So to say like, oh, we are in a great recession right now, like it takes time. Even if you're right about a recession call is a gradual process, not a, you know, snap call based on one jobs data point. I do think that it's fair from the NFP report. If you're looking at something like dollar yen or euro yen, you know, the demand for yen coming back is kind of fair in a perspective of, well, there's a higher chance or probability of a possible recession. So I get that. But I think that in the short run, it became very overdone. And where do you think this has room to go to? Ivan, do you think we're sitting right here on dollar yen at 147? I think if we get a closure somewhere in these wicks, that it's very possible that we see a little bit more upside and that maybe this dollar yen normalizes a little bit further.
Yeah, so about where this one is going to go, it's of course highly dependent on what Bank of Japan does and wants to do in the future. If they want to do a rate hike again anytime soon, which is very unlikely, but hey, that's the name of the game.
Yep.
And as well, when we're saying trading Forex is risky, this is the risky part. Where things just drop out of your hands and you're like wondering what is going on with my account. I'm losing. That's where you have your stop loss, right? So it did, Kyle did drop 2,000 pips. And in my simple opinion, and when I've been trading this kind of scenarios a couple of times now, that we are going to go higher eventually. It's going to reduce what generally tends to happen is that the volatility reduces. It starts going a bit of range bound, and then it kind of like, it trickles a bit higher, because what is technically or more flow wise currently happening is that a lot of buyers on dollar yen left the building, but they also got a ridiculous discount.
Yeah.
We're seeing that dollar is now maybe going to have a rate cut, and we may have a rate hike in Japan, but that's not occurring.
Yeah.
We still have quite high interest rate in America. We still get money from doing the carry trade.
If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.